Hey, what's going on everyone? It's Griffin here, and investing in the stock market doesn't need to be as difficult as it's often made out to be, with complex charts, graphs, and terms that'll make your head spin and leave you wondering why you don't just have your portfolio managed for you. Why don't I just get this done for me? Well, lucky for you, in today's video, I'll be walking you through exactly how you can build a low-cost dividend exchange trade fund portfolio that requires very little maintenance on your end, but will continuously throw off passive income for the foreseeable future. It doesn't get much better than that. And so with that said, throughout the course of this video, I'll be first walking you through the steps necessary to opening up your brokerage account, followed with how to deposit money into said account, analyzing some investments, and then purchasing shares of your first dividend ETF. So let's get into it, and as always, if you find value in today's video, please take a second to drop a like. It really helps the channel out. But before we get ahead of ourselves, opening up a brokerage account and investing our hard-earned money, why would one want to start dividend investing in the first place, right? That's a valid question that we should be asking ourselves before investing into something that we may not fully understand. Arguably, the most important factor contributing to the rise in popularity of dividend investing is its level of financial passivity, where investors can create a new income stream with nothing more than their cell phone as well as a couple dollars. And although sure, investing $100 into dividend stocks may not get you competing with the likes of Warren Buffett, well, the principles of dividend growth investing are the same regardless of if you're investing $100 or $1 million. Bottom line, dividend investing is pretty much synonymous with passive income because you don't even need to lift a finger in order to start collecting your dividend payments. It's all automatic. Above providing you with passive income, dividend distributing positions are utilized by investors of all kinds seeking to mitigate risk by relying on more than just the fluctuation in market price to create an expected return. You see, while most quality dividend stocks won't appreciate by say 30% throughout the course of a year, like for example Bed Bath & Beyond, wait, that's not right. Well, generally speaking, they also won't be subject to massive fluctuations or drops. Yeah, that seems about right. So while a higher level of portfolio volatility is to be expected for investors who are investing in growth stocks like say Apple, Amazon, or Google, well, when it comes to investing in dividend stocks, typically these portfolios won't be subject to the same levels of volatility, especially during bear markets and periods of economic slowdown. Of course, though, this is also why it isn't reasonable for investors to expect a dividend stock to appreciate as rapidly as a growth stock would during a bull market. Bottom line, dividend positions can offer a stock market portfolio a higher level of stability riding throughout different economic climates. Finally, dividend income provides a fantastic opportunity for even further compounded growth in the value of your stock market portfolio. When you receive dividend payments from a dividend distributing position, that income may seem relatively small and quite insignificant because yeah, $8 isn't going to get you that far, but lo and behold, 30 years later, that $8 in dividend income today is worth quite a bit more than a latte at Starbucks. This is because when you reinvest the dividend income that your portfolio is generating right back into purchasing more of those very same positions, well, over years of further compounded growth, it's like throwing a slow burning log into a fire. The difference between two individuals starting to invest $500 a month at age 20 through to the age of 60, considering a 3% average dividend yield and 5% annual growth rate, is around $230,000. The investor who doesn't reinvest that dividend income would end up with a portfolio value of roughly $725,000, while the investor who does choose to reinvest that dividend income would end up with a portfolio value of roughly $972,000, all other things being equal. All right, so now that we're more familiar with why some investors may be interested in seeking out dividend distributing positions to make up their portfolios, let's now actually jump into portfolio creation, starting with opening up your brokerage account. Now, the truth is you can create a dividend portfolio with practically any stock brokerage of your liking, and lucky for us, the high competition over the past 3 years between stock brokerages has led to commission-free fee structures amongst many options available. Now, this video isn't about the pros and cons of different stock brokerages. However, some of the best options in Canada for low fees include Wealthsimple Trade and Questrade, and down in the United States, some popular options again for low fees include Fidelity, Webull, and M1 Finance, just to name a few. So definitely conduct a bit more research into each one of these stock brokerages to determine which one is going to be best suitable for your own needs as an investor, and then go from there. For the likes of this video though, we'll be utilizing a Questrade portfolio that offers commission-free tax-free ETF purchases. And by the way, if you want to use Questrade yourself and follow along throughout the course of this video, you can check out the top link down below in the description to open up a Questrade account yourself, and you'll get $50 in free trades. Now, once you've entered your personal information to open up any of these stock brokerage accounts, you need to go ahead and select the type of account that you first want to open. And generally speaking, if you're new to investing, you're going to want to start out with a tax-free registered investment account such as the TFSA in Canada or the Roth IRA in the United States. Essentially, these two accounts allow your investments to grow on a tax-free basis indefinitely. So those $1 million investment portfolios that we just looked over previously, those would be entirely tax-free years down the line when you're looking to start withdrawing from those accounts to, say, pay for retirement. All right, so from there, once you've opened up your brokerage account and also selected the type of account that's best suitable for your needs, well, the next step is to deposit money into your account so that you can purchase investments. Typically speaking, this is quite straightforward by simply linking your bank account, and some of these brokerages also offer e-transfer as well as other forms of payment. In this case, I've already gone ahead and deposited some money into this account. So we can see that there's some cash sitting there waiting and ready to get invested. But really, regardless of how much you're looking to start investing with, everything we'll be covering applies in the exact same manner, whether or not you're starting with $100 or even say $100,000. At this point in the process, you're ready to roll with your first dividend distributing position. The cash is in your account and ready to be deployed into a quality dividend ETF. And by the way, there's quite a bit of due diligence and research that goes into analyzing and assessing the viability and quality of a dividend distributing position, right? Not every dividend distributing ETF or stock is going to be equal just because it distributes a dividend in the first place and may not represent a good investment opportunity. So proper due diligence is always in order. And with that said, there's way too much that goes into dividend position analysis for today's video. So if you are interested though in learning everything you need to know about assessing quality dividend stocks and exchange traded funds, then I would highly recommend that you check out my full dividend growth investing mastery course over on Skillshare that you can check out entirely for free on a 1-month free trial. The course is just under an hour and a half long and covers everything you need to know in regards to dividend growth investing. Again, you can check that out, link down below in the description, and it's completely free on a 1-month trial. Now, that being said, if you're looking for a more hands-off approach to your dividend investing, then utilizing quality dividend exchange traded funds can be a great option to earn some dividend income while also diversifying the positions that you're holding within your portfolio. So although you should absolutely conduct your own due diligence when it comes to narrowing down viable investments based on your own investment criteria, here are a couple of great options that I've highlighted in recent exchange traded fund videos that I created on my channel. Now, a couple of great options for dividend focused exchange traded funds in the Canadian markets would include VDY, PDC, XDIV, ZDY, as well as VGG. Down in the United States, some great options for dividend-focused exchange-traded funds would also include VIG, VYM, SPHD, as well as RDIV. Each one of these dividend-focused exchange-traded funds I have a full breakdown of in a previous video that I made recently on the channel. Each of these dividend ETF options provide nice dividend income, consistent and sustainable growth over time, along with relatively low fees. Now, as a side note, I narrowed down these viable ETF options utilizing ETF screeners such as this one that's completely free to use, and I'd recommend playing around with these yourself. They're great tools for investors that I think more people should actually utilize because you can narrow down thousands of positions based on your specific investment criteria. Additionally, especially when you're first starting out, it's important to avoid just seeking the highest dividend yielding position because a high yield doesn't necessarily equate to a viable and sustainable dividend ETF position, right? For example, take a look at this position right here that has a very high yield, but the actual position itself, the value of the underlying asset, has been bleeding over time. This is what's known as a dividend trap, and as a long-term dividend growth investor, you absolutely want to avoid. All right, so at this point in the video, I'd like to bring you through the process of actually purchasing your first investment. So as I spoke about earlier, in this case, we're going to be looking in this Questrade account where you can see the total value of the account is around $1,030, and there is around $940 worth of cash in this account ready to be invested. So after some analysis on the side, I decided to move forward with purchasing some shares of XDIV. So in order to go ahead and purchase that investment. On pretty much all stock brokerages, the process will be the same. So you go ahead in the search bar, we're going to be searching for XDiv in this case, and it is the iShares Core MSCI Canadian Quality Units fund on the TSX. So in this case, we can look at the stock's chart as well as quote information relating to it. What I like specifically about this fund in particular, though, for a dividend fund is the fact that it has a relatively low management expense ratio, at least in the Canadian market, of 0.11%, and the dividend yield is 3.98% as of the time of filming this video. So if we wanted to move ahead and purchase some shares of this investment, we can do so by selecting the account that you're investing in. In this case, I only have one TFSA account, but again, regardless of the type of account you're investing in, the process will be the same. So we're going to click on buy, and then in this case we can place one of two types of orders, either a market order, which we'll actually be doing in this video, or a limit order. So quite simply, a market order, though, essentially you're telling the stock brokerage to fill your order as quickly as possible by purchasing shares of other shares that are up for sale on the market at market price. Now that being said, this could fill the order at a price point that is a bit below or a bit above the price that is actually listed in the quote, or if you really have a set target for which you want to purchase shares at, you would go ahead and click on limit order and input the price at which you want to purchase shares. In this case, though, since this is a long-term hold for a quality long-term dividend exchange traded fund, we're going to go with the market order and click next. By the way, if you want to learn more about all the different order types, I made a full dedicated video on this exact topic that you can check out on the channel after watching this one. So in this case, we're going to purchase say 5 shares worth of this exchange traded fund. That would give us a total value of $119. In fact, I'm going to purchase 10 shares of this for a total of $240, and that is from the cash balance that I have in the account currently. If we click on next, this is going to bring us to the review order page, which is also going to be quite standard for most stock brokerages. Now in this case, Questrade also offers commission-free, so $0 ETF purchases, and that is why the commission and fees section is essentially 0 in this case. We're going to go ahead and place the order, and that's it. The order was placed. It'll be filled almost instantly depending on the volume of the asset that you're looking to purchase. In this case, the order is filled basically instantaneously, and we now are the owners of XDiv Dividend ETF. Now, if you wanted to continue investing in this exchange traded fund or any other fund that you've identified as being a good fit for your portfolio, all you would need to do is come back to this page on a periodic basis and continue purchasing more shares. So that wraps up today's video. I really hope you found value in it. If you did, please take a second to drop a like. And again, if you want to learn more about dividend growth investing specifically, make sure to check out my full dividend growth investing mastery course over on Skillshare, hour-and-a-half long of quality video content, giving you everything you need to know about dividend growth investing. It is completely free on a 1-month free trial, and I'd highly recommend that you check it out. Now, also don't forget to check out the other links below in the description to open up different brokerage accounts. You can get free money for signing up and depositing money into those new accounts. With that said, thanks for watching. Subscribe, hit the bell button for new content, and I'll see you in the next one.